So right now, it is what we call the tax season. When you talk about tax season, it's just like the harvest season for the farmers. It is the time that we have worked whole year for the businesses. Now it's time to put those numbers, put the result on the tax return. But we also know that not all of our small business owners are working with a professional firm to do their tax return. A lot of you are very innovative and you want to do it yourself. So this webinar, it is about us giving you those key points where we train our staff the same way. We tell them what's important in the year, what you need to know. So the rest of the webinar today is to just tell you what's important for 2022. All right, we're talking about 2022, folks, not 2023. But when we are talking about 2022 tax return, we will kind of give you the reference from 2021 and also from 2023, so you can see what you do for the 2022 tax return. Prior to that, and we like to share screen with you so we can guide our conversation to make it really quick and precise and meaningful for you. All right, of course, on internet, there's the knowledge are so fluid and you know, so much change can go on. And you know that when you go on internet to search for things, they may not be correct. So this is the recommendation from our corporate attorney, and for us to put in no responsibility disclaimer to the listeners, to the people who are watching our webinars. And if you really are going to rely on what we said to make a critical decision in your life, I want you to come to see us. I want you to engage a paid service to lay that understanding and responsibility properly rather than just do it yourself, because you can only go so far to do it yourself, right? All right, so we offer return review service. So what does that mean? That means you did a return and you don't need to give that return to me. And you can go onto our website, and I screenshot here. You see how you have this appointment button right here, and you can actually book appointment with me, and I'll spend 45 to an hour and to answer all of your questions and review your taxes. You know how Zoom had provided us such a great tool. We literally can look at your tax together, and if you use TurboTax, and we use TurboTax. So basically, if you want the review service, and you should book that now, don't wait until the last minute, because we have, especially on my calendar, it gets booked up pretty quickly. So we do charge, and you will see the fee right on the screen when you go. But I think that's the money well spent, so you know that what you did is perfect, it's correct. All right, so let's talk about things you should know for 2022. Have you heard of a new energy efficient home credit? No? And if you don't know what that is, let me explain to you. And this is for eligible homeowners and builders. So largely utilized by builders nowadays. You know, if you have a home building business, you probably knows what I'm talking about. But if you are a home builder, but you are actually doing your taxes yourself, or you're doing your taxes with someone who doesn't know anything about new energy efficient home credit, then that may be a time for you to think of someone who actually be more updated with the changing environment, right? Since 2019, I'll tell you, the taxes has changed so much. There's so many rules. They're just there for 2 years, 1 year, then they're gone. It's just very confusing. And I don't blame the tax professionals, and a lot of them, because of the overwhelming demand, just don't have time to update their knowledge, so they don't know. But this is something I want you to know. A eligible homeowner builder is a person that constructed a qualified energy efficient home. Okay, a person must own and have a basis in qualified energy efficient home during this construction. So this is definitely, we're talking about the homeowners and the builders. Of course, you can be a builder as long as you have a stake in that construction, right, in that building. And when you have that, you are eligible to receive that credit. So-called eligible to receive the credit just means that it should show up on your tax return, not the contractors or not somebody else's. It is you who is the builder and have a stake in the house, or you are a homeowner, you are doing it yourself, that you qualify for the home credit. For example, Darren is a builder. Darren contracted Jose to build energy efficient home. Then Darren can sell the home and claim the credit. Jose cannot. Does that make sense? Right? So make sure you understand who is who on the credit, who can claim. So now you may say, well, tell me what is qualified new energy efficient home. A qualified new energy efficient home is a residence unit located in the United States. So obvious, right? This is the IRS. So located in the United States, okay? And whose construction is substantially completed after August 8, 2005, and sold or leased to another person after 2005, but before 2033 for use as a residence. So basically, you're thinking of, when you build this between 05 and 33, and even if you're a homeowner, you already own it, you have it, so you should have the credit. But if you're a builder and you sell it for it, and then or use as a residence already, then as long as that usage is there and you qualify for the credit. The home must be certified and meet certain energy saving requirement. So this is ongoing, still getting clarified in our home building business world. So there is a famous one is Energy Star. That logo you have on Energy Star blue and the white logo. If you have that logo on there, the things you bought, the things you installed, that is qualified for home efficiency credit. Construction includes substantial reconstruction and rehabilitation. So they are trying to define what kind of activity that you do, you can qualify for the credit. They're saying that, okay, if you are doing reconstruction and renovation, rehabilitation, those you can qualify, right? So you notice that for small business owners, folks, sometimes you're doing that for your own home. And so that is eligible for you, for the home owner and the builder. Just hear that really clearly. This prevailing wages, I don't want to confuse you in great detail, but just understand when you are a builder or when you are hiring people to do the energy efficient home credit claim, you obviously know you're doing that, right? And you need to make the prevailing wages requirement. And this requirement, it is after 2022. So, from now on, folks. But in 2022, you don't have that requirement. And in 2022, okay, and the year 2022 and before, the maximum credit is 2K per unit, 1K per unit for manufactured home. So it is not the same in 2023. So I listed for you on 2023 and to 2032, the maximum credit. So you can tell it is largely increased. And, single family Energy Star, you have credit of 2,500. So, you know what I mean by credit, right? Those credit means tax credit. They are not like you go to a store to buy things, they give you a coupon, say you have $5 credit. That is when next time you buy a $5 merchant, you have the $5 credit. But when IRS talks or when government talks, and this is tax credit, which means that if you were going to pay $2,500 taxes and you suddenly now don't need to because you got that money back. That's your tax credit, offset your tax liability, folks. All right, so that's so much about new energy efficient home credit. And don't tell me, and you did not know, you need to know. If my talk is not enough for you, you at least know how to do keyword search, right, on the internet. you're good with internet anyway, because that's why you're here. So make sure on 2022 you have potential for that 1K and 2K, but of course in 2023 you're gonna have more. Now let's talk about clean vehicle credit. I know 2022 is a little confusing, but let's clarify this. If you bought a vehicle, so let's do this. I'm sorry. Who qualifies? So clean vehicle credit, who qualifies? You. If you bought it, not for resale, you're using it, and you use it in US, you have it. The maximum, $7,500. Tax credit, folks. This is not the sales. This is $7,500 taxes you're supposed to pay and you don't need to pay. Make sense? Okay. Now, for year 2022. So I want you, we're focusing on you doing your taxes, folks. So 2022, okay, when you file your tax form and you got a Tesla and you bought them before that 200,000 electronic vehicle expires with Tesla, then you don't have that credit. Okay, so my understanding is after August of 2022, if you order Tesla and you receive Tesla and they are already running out of the 200,000 electronic vehicle standards, so you don't have the $7,500 tax credit. But there's other electronic vehicles you can buy, they did not exceed. So in 2022, you may still qualify. So this is a requirement. The vehicle must be and have an external charging source. Yes, those hybrid ones, you don't have external charging source, they don't qualify for clean vehicle credit. But the one that, got a plug and you can do it. And also the manufacturer requirement cannot be more than $200,000 vehicle already sold, then you don't qualify. The new vehicle credit, if you buy and take delivery of a qualified electronic vehicle, say Tesla, and say they didn't sell for 200,000 yet, between August 17 last year and December, the end of last year, the same rules applies, means that you can get that 7,500, plus the vehicle must also undergo final assembly in North America. You see what they're saying? Because that Inflation Act came out on August 17th. So when it came out, it says that, hey, after I got the act out, approved, become the law, and the vehicle has to be assembled in North America. Otherwise, even if they didn't sell for $200,000 vehicle yet, you still do not qualify. So that is an added requirement after August 17 last year. And if you entered a written binding contract to buy a vehicle before August 16, but you took possession after the Inflation Act was in place, then that you don't qualify, you don't subject to that limitation. So good luck with that. I don't know exactly how you did your vehicle, but if you just kind of not clear, come back to look at the slides, okay? All right, and for 2023 and after, these are a whole bunch of things, information I gave you, but just know that in 2023, that would be the only year you're going to do the 7,500 claim. But after 2024, the credit will be given to the dealer. That means your price is going down by that amount or more. And how did that work? And I don't know the details yet, but it looks like in 2024, on your tax return, there would not be that line for you for new clean vehicle credit anymore. All right. Now, let's say, where do you find all these information, folks? And you're going to find them on this website. Take a picture if you're not sure, because I want to give you this two-step to verify the final assembly, okay? Because how do we know where they assembled? It's not like we can knock on the board and then, knock on the car, goes, where were you, finally touched up? And so these are the website you go to figure that out. And then, of course, if you make too much money and you also don't have those kind of credit, and that is just for people who had a moderate income, not for the ultra well-doing, right? So 300,000 verified joint late, that's not really much. I mean, I have people in hardship even though they have 300,000, verified joint late. Just really depends on what people do with their money, I guess. So I trust the IRS knows how the whole nation works. And if they, I also trust President Biden knows how to draw that line and who are the people belongs to this helping group, who are the people belongs to those adopted child so they don't get help, and I know they know it really well. All right, interesting. Business meal deduction. Okay, do you know that in 2022 you should not be even eating at home? I'm just kidding, okay? I'm just exaggerating to the point that you would be like, okay, I remember what you said, Ying. If I have the magic, I will make my whole webinar a cartoon movie and with jokes. And because that's the only way to get people's attention and to get people to learn. Nowadays, who reads? I mean, I see books come out. The hard copy of the book didn't get sold, but the audio's getting sold left and right. What does that mean? That means people don't read, they just listen to the book, right? So the business meals. The IRS suspends the 50% deduction limit. Remember, one business owners goes out to eat with client and we give the ticket to the accountant. The accountant goes, okay, boss, you can only deduct 50% of that, right? You know that, right? Then you say, yes, I know that. And IRS took that out for what? For how long? For 2 years, 2021 and 2022. All right. So they say that if you dine in, take out to support restaurant business, IRS goes, the business related expenses, your business owners, good dinner and go to restaurant and yes, we let you deduct what? 100%. You can deduct 100%. So on the tax forms, when you are doing your taxes, and you're going to see that they offer you the line 100% deduction and also 50% deduction. They're not getting rid of that. The IRS knows it is coming back in 2023. So they're not taking it out. And so your software folks are not taking it out. So you need to know that to put that number on the 100% because that is a temporary relief IRS offered to business owners. Okay, so that's that. Oh, cryptocurrency. There is no change in 2022, but I want to bring this up to you because you know how when you do stock trading, Fidelity or TD Ameritrade, they give you a 1099B and they give you a summary of your trading history. Am I right? So these report went to IRS every year because IRS required them. Require TD Ameritrade, require Robinhood to send those up to them. So when you submit your tax return, IRS machine will match that with what these financial institutions submitted to them. Now, cryptocurrency world is changing. Maybe that is why everybody is declared bankruptcy, because they couldn't really have the right books and record to support that consolidated report and the customer report. So with that said, the IRS said in 2023, and if you trade cryptocurrency, you will get a 1099B kind of report. But 2022 is the last year you don't get it. But of course, if the cryptocurrency trading platform decided to issue you one, then they are the early adopter, but they don't have to. So the reason I mentioned to you in 2022 is because I want you to really look at your reporting in 2022. Do you know that even though there's no report to IRS in 2022, but the 2023 report gonna have a beginning balance of 2022. And imagine if you report 2022 so off, that beginning balance of 2023 not going to let you off the hook. You will be audited. I promise. So with that said, 2022, you need to know your trading history, your account balance, and you need to report that on your Schedule D. Very important. And when they're saying, the check mark says, do you trade cryptocurrency? Your answer is a big fat yes. Okay? That way you stay in compliance. And I'm telling you, the audit, nobody wants to be audited. But when you are audited, and you would wish that everything you have done is in compliance. And there are people just really live on the edge and they don't care. But my client, myself, we don't live on the edge. We live for legacy. So we want our business to go forever. And we want our children to grow up in this safe environment. And we also want to do the right thing. Okay, and anybody can challenge anything, and people can challenge our constitution is now right, but in human society, and what the rule and regulation holds the majority is the right rule and the regulation. If we want to make changes to that, we go through channel to make change. But just you yourself decided, who is IRS? I don't know them. I don't care about them. Oh, you do. When they come to audit you, they will make sure you care about them. So having said that, I am just trying to say that do it right, you can sleep better, and do it right, you don't lose money. If you really do it right, plan it right, and trust me, our tax system is not the one ripping people off. You only felt you were being ripped off is because you are not doing it right. That is my 27 years experience working in accounting and tax world. Okay, now financial institution reporting change. So this is the one IRS was pushing. IRS want to have the merchant account like the PayPals, the Venmos, and all of these transaction charged business to report on consumer transactions. So the way they're doing it, it is to say that if you, if you withdraw or deposit, okay, the total amount of deposit and withdrawal over 600, that's deposit, withdrawal over 10,000, okay, and then you will be reported by that financial institution. So this is effective in 2022. I want you to sit tight. Don't file your tax return. If you had made some deals on PayPal and had more than $600 deposit, you may not even remember, but IRS would know because PayPal is sending that over to IRS. So you really want to wait until all of these 1099 stuff and already getting sent out before you do your Schedule C, before you do your Schedule E, before you do your Schedule Farm F tax return. All right. And this is a advice we give everybody, and give time, because these financial institutions, they have been working so hard over the years trying to figure out how to report them to IRS and also report to you. And you are yet to discover what you have on under your social security number or under your business EIN number for the amount you're incidentally deposited in the PayPal account. So this is the IRS clip, and we took it out. And previously, the threshold was 20,000. Okay, folks. Now it went down to 600. And regardless of the number of transactions, previously it was 20,200 transactions and above, they will do 1099K. That is gone. That is out of the window. And so your 2022, just wait and see. You might get a stack of 1099K. It's like, oh, I didn't even know I have that. Oh yeah, you know it this year. So give yourself time, okay? Don't rush to file your return. And for those do-it-yourself folks, I want you to know, total is no good. If you just plug a total on the sales number, not good. And then you want to break those K1 down to each one of them. So one IRS machine going through the taxes matching, and they actually can see each item. So that income side, we strongly recommend you to do it line by line and not a chunk, right? And be aware of audit. Didn't I say a lot about that already? So yeah, IRS is positioning to audit more. And I will tell you that audit is one of the big money generator for IRS. And they will walk into a business and audit and get more tax paid, okay? So I'm not saying that 100% of their audit they're going to get money paid, but majority, and the Inflation Act provides a additional 80 billion in funding to IRS, and the 46 billion is located to where? To tax enhancement. All right. So they will add 87,000 full-time employees, and currently IRS has 93,000. So they're going to double their workforce. So just a simple analogy. If you get IRS letter once a year, and with this manpower increase, you're going to get it twice a year because it is double. It is almost double their size. The increased IRS funds is estimated to bring an additional 200 billion revenue. Hey, 200 billion revenue from those audit. Hey, you owe me more. Just don't join that 200 billion team. But if you don't do your work, and if you don't run due diligence, and you just take it too casually, I mean, yeah, you're part of the 200 billion IRS goal for audit, right? All right, Schedule K2 and K3 is another change, folks. If you're doing it yourself and you got a K1, and if you know that the partnership you are in has a foreign activities, you should be looking for K2 and K3. Okay, this is only related. So that means your form is a lot bigger. You have K1, K2, K3. And just remember, this is only for partnership and S corporation because those are the one issue K1, K2, K3, right? And the K2, you can simply imagine that to be a summary of the whole partnership's foreign activity. So what is foreign activity? For example, if part of your operation is completed in a foreign country and your revenue is coming from there, then that's your foreign operation activity, right? So that should be on K1. On K3 is the split between the partners or the shareholders. So these are the schedules. So this is 1065, one slide. The other slide is 1120 S. But overall, I just want you to understand that. And if your partnership as a small business owner, and if you're getting K1 from some friends that you partnered with him or her, and you are getting K2 and K3, and you know what that is, and you're just gonna follow the K2, K3 instructions to fill in your 1040, folks. Those they are there. They already designed for you, and do it yourself is possible. But what if you didn't get K2, K3, but you know there's a foreign operation? That means you need to talk to your partnership to make sure that they, my peanut is having interest to outside. I forgot to close the curtain, but hopefully he's okay. Your K2, K3 should be issued. So you want to talk to the accounting firm about that. This has been sent out by IRS, becoming a tax law in 2021. It's not even in 2022. But a lot of people didn't follow the rule. So IRS reiterated, okay, 2021, you can forget about it. But 2022 for sure need to be done. So that's what they said. Just passing the word to you. child tax credit and earned income tax credit for 2022. Bad news in general because they are not there anymore. So this is 20. Oh, for child tax credit, let me go back to my other slides. I think what I did is I actually forgot to remove that thing, but that's okay. So the child tax credit reverted back. Okay, so if you have a child tax credit, it's only 2,000. But let's say if you don't have enough taxes to offset that 2,000 and you only get 1,500 per child. So child tax credit reverted back and it's no longer COVID time. And earned income tax credit is the same thing. It's also reverted back. And this is actually just 2021 because I want to show you that not if you don't have a children and if you low income, if your income is less than 22,000, you actually do get 1,500 on earned income tax credit. Not the case in 2022, and they actually lowered it back to 500. So overall, these two big credits are actually going away. So not going away, going back to where it was. So just want you to know. And as a small business owner, and if you use the software to run your tax return, which I know you do, and those should be already embedded in the program design, so you don't have to remember that. But if you just sit there wonder, oh man, I paid more taxes this year, why? And then the reason might be resides with your child tax credit and earned income tax credit. Okay, so that would be that. And for the student loan debt for 2022, this is worth mentioning. Tax-free cancellation of student loan debt and the discharge of student loan is not included in the gross income from 2021 to 2025. So that's why 2022 is in here. And if you have the tax software, and is actually you will receive a 1099 note from the discharged organization. And when you go into the software, it will ask you what kind of discharge that is, and you will know that you need to select student loan discharge cancellation. Otherwise, they will treat that as other loan cancellation, which you would pay taxes for. Okay, so make sure that you know the student loan can be discharged and you check that properly. That's why we're talking about doing it yourself, right? You just in your mind, you just know that is something you need to look for. And the charitable contribution for 2022 is also reverting back. No extended to 2022 expire last year. So there's no such thing about 600, the 300, forget about it. And it went back to normal. But our Schedule A didn't change. So in a lot of ways, our charitable contribution is varied by the standard deduction being higher than before. And they also, President Trump also took away the state taxes that normally people like, in Iowa, Minnesota, and California, that we can put the state taxes in our Schedule A, so have a higher deduction. That's gone, and they limited that to 10,000. I think President Trump forgot about there's other states who pays taxes. He thought there's no state paying taxes. They're all like Florida. I'm so sure he just forgot. All right. So net operating loss. So what is net operating loss, folks? And you may have a net operating loss because you're small business owners, and in the first year operation, your Schedule C was like huge negative, and a negative 200,000. But your salary on W-2 is only 50,000. So on your tax return from 2021, and you notice that there's no taxes, no tax pay you need to pay. And folks, this is where if you are doing it yourself, please don't change software. Just continue using the same software so they can carry your number over to 2022, okay? Those negative number are golden because they're going to help you to not pay taxes for years to come if you did not make a lot of money. So like our President Trump, he doesn't need to pay taxes for a long time because he has so many millions losses, right? So that is the net operating loss, and don't lose it. And if you, let's say if you always do it yourself, then this year you're like, oh, Ying, I don't think I can do it myself anymore. I'm too scared, and I want you to do it. And you can have me do it. And I am very big with carrying over value because I know that's a gold mine. Sometimes clients don't even know they lost their carrying value from one preparer to another, or from themselves software to other people's software. So you want to go to the tax preparer. You don't have to come to Community CPA to do that. You go to your tax preparer, you tell them that, can you show me what are my carrying forward value on my return? Is there any? Can you show me what you see? So they will point out to you. That process will help them not to forget. Very, very important. You may have this suspended rental loss. You may have suspended capital loss. You may have suspended NOL. All right? Please don't forget. So in 2022, you know how uh, there was a carry back thing in 2020. Some people remember that. If you have a big loss in 2020, you can carry back 5 years to get that loss recuperated by the net income in the prior 5 years. Okay, and but now in 2022, the losses you have in 2022, you cannot go back to 2021, say, hey, I paid a lot of money, let me just you know sorted it out and recuperated from 2021. No, you can't do that. Carry forward only subject, carry forward is also only subject to 80% limitation. Not only you cannot go back, and if 2023, if you lose $200,000 in 2022, in 2023, the most you can write off is 160,000 because they don't allow you to write off 100% anymore. So this is where the changes come in 2022, folks. All right. So of course, I also listed the business losses and the interest expense limitation. But here we are, for our audience today, we are focused on small businesses who file a simple tax return for their business. And this is what you need to know. And you cannot carry back anymore. To carry forward, you have an 80% limitation. All right. That concludes my whole running through of what I think is really relevant for our small business. And of course, this is our 3 p.m. afternoon webinar, and we're really big with this because we know how important you rely on this. How many times, I can't even tell you, so many times client and new clients would tell us that, Ying, and the webinars you have on Community CPA channel had saved my life over the pandemic time. And I knew, and the first time I hear it, I was delighted. The second time I hear it, I was proud. The third time I hear it, I felt I am obligated. We are obligated to make sure that we continue to do that because all of you needed that knowledge. And in business world, knowledge is the key. You know, then you do. If you know how to do good sales, you're going to sell more. If you know how to do good taxes, you will be efficient with your taxes. You're not going to pay tips to IRS, and they don't care about your tips. IRS just care you are doing the right thing and you utilize all the rules and regulations, tax laws out there to help you grow your business. And I'm telling you, I'm sincere in saying that because I know that is the case. But folks, if you don't have that knowledge and you think you're paying too much taxes to IRS, that is really no one else's fault but yours. investment not enough for the well-being of your financial status. So I hope to see you coming to Community CPA. I hope you to join the free Zoom webinars, 3 p.m. on Saturday. Rain or shine, we are here. Well, of course, if there's no internet, there's no rain, no shine, and as long as internet is there on the globe, on Earth, and we're there. I'll talk to you